Hello, folks. Brandon Chapman with you today. It's another edition of the Monday Theo Night video for August 8th, 2022. Can't believe summer's almost over. The question is the rally almost over? Memes surge today as we party like it's 2021. Boy, you look over the last, number of weeks, if you've been watching my videos, we've been talking about the fact that the shorts are leading the move higher. Certainly you have other names that are participating. You got a GM and Ford today, and you can go down the list. Obviously, Apple will normally kind of track what the market does, but where is the opportunity right now and on a day-to-day basis? And it's really with the high short interest names, and that's been a central focus of things we've talked about over the last number of weeks. For example, last Monday, we looked at Nikola, unusual option activity leading at its earnings. It made a huge move. And on Friday, I talked about bearish activity, put activity in Nikola. And you see it shoot up today, and we're kind of fading back. This is a revolving door, and it's not lasting. These companies aren't great companies. So the question is, do you trust the meme? Meaning that, can the meme save you as you hold these stocks for more than a day or a few days, or until you see the pop? So we'll kind of talk about today. We'll look at a number of names that are tying into that. But if you look at the S&P, we did where we are about to finish lower today, just by a smidge. I mean, it's nothing big, but we've seen this kind of rally. We're hitting a resistance level at around 416 on the SPY, or if you look at /ES, we're up here around 4,200, which is about where today's high is. So the question is, can we continue to surge higher? I mean, the amount of momentum and strength that we achieved in June. We talked about the 2-week bullish period from the 29th, and that kind of built the base here. And then we've been just squeezing higher. And again, we've seen over the last number of days, the last week maybe, it's starting to look a lot like 2021. Did 2021 last forever? Well, you could look at stocks like AMC and see, did AMC hold on to those gains in March, for example? Or let's go back last year when it surged higher here. No, it was temporary. And this is the reality that we live in, right? These stocks that have very significant short interest, is there an underlying case for why these stocks should be trading at 70 like AMC? The answer is, of course, no. Other than if there's enough short interest, we see enough momentum, can we squeeze there? I just don't think we have the possibility of recreating what happened in 2021, thinking it's the same. But the realities are we can make big moves like we're seeing in AMC. But again, they're temporary. So when you look at stuff like Nikola, again, a stock that we were focusing last week, we get the big move higher. Now's the time to take profits. The revolving door is hitting Best Buy. Bed Bath & Beyond. That was loud. Bed Bath & Beyond. Bed Bath & Beyond's up 40% today. Is Bed Bath & Beyond a great company? Is there any real news? Well, the company just announced earnings in late June, and the stock gapped lower before what? Consolidating and then squeezing higher. What this stock has going for it, it has significant short interest. So if we look at it, for example, let's just bring up BBBY. What does it have going for it? It's right here. Toe fungus. No, a short percent of float. 100%? Are you kidding me, right? Are we doing the same kind of scenario that played out when we were watching GameStop over a year ago? This is the point that's being made right now. And you have those that probably made money in 2021 thinking it's exactly the same environment today. The answer is it's not, but they're trying to recreate it. And who knows how far this can go. But when you get a big gap like this in Bed Bath & Beyond, sometimes it pays to sell into strength. And today there was some bullish activity for this week on the 12 AUG expiration, kind of pumping these out of the monies here at $14 strike price as well. So the point is, there is bullish activity, option activity. We're creating kind of the gamma environment where we could squeeze. We'll see how much of this carries over. And as we get these break points at 12 and push towards 14, can we push above 14 and then trade higher? Notice today's high was around 1330, maybe. But again, we're trying to kind of anticipate some of these moves with some stocks. Now, as we look at the sectors that performed well, real estate did well today, communications, Meta was in the mix, kind of turning things around a little bit. But again, is this the type of stock that's going to lead the market higher? Probably not. Is this the part of the market that's going to really surge even if the market stalls a little bit? It's not, right? I'm like, so again, it's the stuff that has high short interest. But we're looking at real estate. Real estate did okay today. Why? Just look at TNX. TNX was down slightly, about 0.75 or 2%. Bonds are getting bid here. But bonds are getting bid today in the backdrop of the fact the Fed has not necessarily signaled a pivot. The pivot means what? They're going to start to cut rates, or they're going to end their rate hiking. Right now, it looks like we may be, increasing rates, 0.75 point in September, maybe another 0.5 point by the end of the year, maybe stalling out at 3.5%. But the bid that we see today in bonds certainly is helping, like real estate. Normally it'd help utilities a little bit, but utilities had a really nice run. We're up against resistance. Real estate is more what? A little more undervalued, relatively speaking, right? So they're scrambling to find something and anything to kind of drive higher at the moment. And right now, the theme has to be the high short interest names. And things have gotten crazy over the last few days, in particular with the number of stocks. A company that I was researching last week and was going to share my Friday top-down class, push it to today because we ran out of time. The Real. Again, what does this fit? It's a company that has high short interest. It's also a company that is a little more not necessarily defensive. We're talking selling, very high priced products, but on kind of reselling them, right? Used products, Gucci bag or whatever you got, you can sell it on the Real. But on Friday, last week we saw, not real estate, but consumer cyclicals starting to make a bit of a move. And then all of a sudden today, you're seeing the breakout in the Real just ahead of its earnings coming up tomorrow after the close. Significant volume. And what stands out for the Real? It's just a function of it has high short interest. So I got a list over here, broke it down in like 5 to 20 and then 20% plus. I mean, some of these stocks are shifting, but again, if we look at today's movement, the Real up 22%. This has been on my list for a while. Companies that have a chance to make moves. Why? Because they've got high short interest, and that's it. So you can go through the fundamentals of a stock like BBBY. Are you going to find anything there? The answer is no. Okay, what you're going to find is a company that's not doing so hot, but it has apparently maybe over 100% of its float shorted. This is a poster child that could look very, very similar to GameStop, right? When people price in the death of a company, what does that mean, right? So we look at GameStop back here. What happened? You had a scenario. We had a company that was continuing to get short squeeze after short squeeze after short squeeze, but the interest was not falling. And eventually the government kind of, forced the hand of the brokerage industry, stop people from buying it, but didn't restrict people from shorting it. So just realize this is kind of a losing game and thinking this is a forever thing. But for right now, what's happening is we have a scenario where institutions are sitting on a lot of cash, hedge funds are very short, and the retail trader does not want to give up the ghost, right? They are not wanting to sell. They're buying into the meme right now. They're holding on to their mutual funds. They're not reallocating. And as a function, we're going through this quiet period. Meanwhile, the Fed in the background is actually tightening the ratchets. They're not diminishing their balance sheet like they had probably said they were going to do. Someone brought that up in our session today. We looked at the balance sheet. We are seeing that. We're not seeing the balance sheet come down as much, but they're not growing the balance sheet. It's contracting a little bit. This is not exactly the same environment that we were a little over a year ago. Okay? And so as a function, these are temporary, these are bear market rally kind of meme type trades, but they're working for now. And it does create opportunity, in particular, if you're an intraday trader, to look at companies like this CGC was up 21%. Well, today in Tilray, didn't plan on going, but up 10%. Tilray, what you see in Tilray was a 12 AUG. You're seeing a lot of pressure on these weekly options. Very similar to what we saw back in 2021. A lot of volume. We'll see how much of this carries over to open interest. But you start to break through $4.50, $5. Could this stock make a surge? We saw it earlier in the year in March as an example. Okay, and right now they're square in the sights of the meme traders, right? The hodls, hold on for dear life. Unfortunately, these same type of people will hold through the rally, and they're going to hold through the contraction because that's what they do, right? They're believing in the meme. But don't trust the meme. Just recognize it for what it is. It's maybe an intraday trade or maybe a few day trade. But the reality is when you get the big moves, you've got to start to scale out. Now, the great thing about options is you can roll them, right? You can roll them to a higher strike. You can take a long option and roll it to a spread. You can take a spread and roll the spread higher to take profits off of the table. Because again, is Tilray a great company? They just lost 90 cents. And the stock's up 10% today. Now, again, we can look at, historical earnings and we say, oh, things look great. They're trading at a value. Well, guess what? Those value erodes if we start to see more of a cyclical downturn, which is what's happening right now as we speak. Some other companies, CHS, Chico's. This company, if you look at it, we're just breaking out. It's one of the stocks that was on my retail list from Friday. But again, volume, we're breaking out to a new high. Look at the higher volume days over the last 2 months as the stock's breaking out. Look at, we'll load what's called the on-balance volume study. Look at how the on-balance volume has been trending higher since early June. Look at how the on-balance volume is higher than at any time in the last year. There is significant accumulation. So Chico's just happens to be in an intersection of where there's high short interest, but it also has, decent, technical development over the last couple of months. We're seeing people accumulate the stock. And the indication is we're going to be breaking to a new 52-week high. Now, again, as we start to incorporate the fundamental aspect of the stock, and so we'll bring it up here on Yahoo, but if we look at Chico's, and you look at the analysis page, we're looking at analyst estimates. There's only a couple of analysts here, but you look at the positive revisions here between 30 and 60 days ago. These are significant, right? 10% projected growth. You look at earnings projections, 37, 71, 79, right? We're seeing an upward expectation for 23 into 2024. And from a valuation perspective, you look at an EV/EBITDA of 7.3, trailing P of 7.89, price of sales. This is a company that's trading at a discount or a value with an increased earnings outlook. And this is the kind of dynamic you want to see, and the on-balance volume is reflecting that accumulation. So the point being is you have some companies out there like a Bed Bath & Beyond that's purely about the short squeeze. Then you got companies like Chico's where you are seeing more accumulation and improved outlook helping to drive the stock. If we contrast that with the real, where's the real at right now? So let's look at real. We'll go to the analysis page. We're looking at losing $1.88, $1.47. Make sure I'm on the right one. Losing $1.07 next year. Huge revenue growth, right? Not really beating analyst estimates all that regularly. Negative revisions here, positive for this year. 38% projected growth for the next 5 years. Does this company have positive operating cash flow? Let's take a look at it. The answer is no, right? I mean, so this is a company that's not really seeing improved like cash flows as it's doing its business. But again, this is one that's experiencing a high volume, a short squeeze, has earnings coming up. This could create a lot of volatility. It's trading at 360. You could look at even possibly even just buying a put at, let's say, like $3 for about 15 cents. At least that would lock in your loss at $2.80 net. So you risk about 80 cents for the prospect of making what? We'll look at the expected move this week. it's about 87 cents. So maybe not be a bad trade-off to have that protection. But again, we could see a move even to 6, maybe even a double here if things turn out relatively positively. And maybe it's not even positive, but the shorts run for the hill. A company that's really reflecting the current environment right now is NVIDIA, right? Down 6%. I'll call them NVIDIA when they start to actually produce a product, a physical product, instead of just being a designer. But NVIDIA is down 6% today. Why? Outlook. It's creating a ripple effect in the industry. Seagate Technology, flattish today. What was it? What was I trying to look at here? MU down slightly. Again, what you're seeing is semiconductors are lagging at the moment, right? I mean, look, they're not participating as fully with the market. Again, this is normally an area you'd expect to see be a leader for technology. This is just a wake-up call, right? We've had the rally out of these names. This is not where the most high short interest is. The reality is we're in what? It's in cyclical stocks. It's in retail. Companies like Gap, right? Nearly, I think, close to 20% short interest. Breakout day today in Gap. Volumes about average. This is a 12 August expiration is where you're seeing the activity at the 1050 strike. Again, we're just trying to push and trying to accelerate the potential short squeeze here. So you start to break 1050, which is about where it stalled out. If a lot of this open interest carries over, maybe you'll see more materialize tomorrow at the open. Could we get a squeeze higher to 11 or possibly even this 12 to 13 range? The strength off the bat certainly would potentially point to that. So again, a lot of these names showing. Skills is another one. SKLZ. We're just starting. The earnings just came out, right? Stock went down. We're up again today. We're fading from the high. If we can take out the highs here at about $1.90, we could see again, it's a high short interest stock. We've gotten this squeeze before a couple of times. Even down here in March, it ran from about $2 to almost $4. Again, could we run to 370 again? Absolutely. It's going to take what? It's going to take the shorts to start to cover. And today we saw in Skills some bullish option activity on the August expiration, the $2 strike price right here, mostly bought. Again, we start to see this move over to the open interest column after tonight. We start to look at $2. We start to break 2. This could really start to accelerate the move, and maybe it starts to climb the list like we've seen a number of these stocks. Rivian was another one we looked at last week that had unusual option activity. Has not moved as quickly, but it's covered a decent amount of ground. And finally, we'll just look at AAL, American Airlines today. Are airline stocks all that great as shakes? No. I mean, you hear all these issues that are going on right now. Again, but what's the upside here? Well, 12, we're looking at a 16 strike today for this week's expiration. The 16 strike, again, if this carries over, we start to break 15.5, 16. Could this engender some some hedging, which generates some covering? We get this positive feedback loop that drives the stock higher to around 18. And even saw another stock in Delta Airlines today. It was up 2.5%. Experienced some bullish option activity in the November expiration. So we're out there a little bit. The gamma side of things is not going to be as impactful out here, but buying some out of the money is at 41, thinking, hey, we may get back to May's high again, which if we contrast that with American Airlines, May's high is right about in here. So can we get a squeeze 18? Could be a very real possibility. But anyway, today that was kind of the theme. You're seeing a lot of option activity on companies that have high short interest. And again, you have the list to start with, and then, very few of these stocks are down. Palantir dropping on its earnings. These are not generally good companies, but EDU is one we were looking at back here, right? With the Chinese rotation in this swing right here. So a lot of these are a little bit older, right? UEC, well, we got CCJ, we got the uranium space. It's doing okay. But again, you can kind of see on a day-to-day basis, AMRS, the company opened up just slightly higher, right? You have the list, you start to watch it, and you see the volume come in, or the real, right? You see the volume come in, and all of a sudden, you have something that you could ride for an intraday basis. You can almost see it right off the first 5 minutes or 10 minutes. You have something that has the potential to move because of the category that it fits in, being the meme, which is what we're looking at, and we're attracted to high short interest names. Now, the question is, when does this start to stall out? You look at the VIX right now. The VIX is not being sold at the moment. We're not pushing to lows right now. That's almost what we kind of need. We need to see some VIX selling. We need to see some capitulation on the bullish side and the hedgers, right? You can see this did tick up today to about 1.15. We want to see this north of 1.2, meaning what? The VIX3M is about 20% higher than the spot VIX. We could get here tomorrow maybe. If we look at SKU's actually picked up of late, and we're not necessarily at a high level at the moment. We're ticked up to about 125, but this, as of yesterday, we'll see whether we move higher today. VIX is slightly higher, probably not, but it will not take much for this to push north of 130. So we have to see the hedges start to come on with this rally, and we're starting to see that here over the last week as the VIX is testing low levels. Still probably need to see a little more downward movement in the VIX to help support or see the hedges come in. VVIX, would be nice to see this kind of start to rise in anticipation of a potential pullback. But for right now, we may have another week where the shorts have a chance to squeeze it. And again, doesn't mean the S&P is necessarily going higher. We might just consolidate here just a little bit at 4,200 on the SPX or ES, 416, 417 on the SPY. We might just kind of see things stall out here and see the shorts play out until eventually the volatility starts to come back. So we'll see. But there's substantial short interest that if this keeps going, we could see we may test highs again before it's all said and done. It's probably not the odds-on bet, but this happens in bear markets. You get bear market rallies. And when does this start to subside? We look to some volatility indications that might help with that. Anyway, folks, got to wrap it up here. That's the video for today. Catch you back to next week. Thank you.